You've probably heard the term bubble in the context of economics or finance. It's a buzzword. Most likely you heard the term housing bubble as the culprit of the United States economic recession. But what does it mean? A bubble happens when an asset's market value gets inflated well beyond its fundamental value, to the point where the inflated value takes on a life of its own. The term originated in the early 1700s in relation to the British South Sea Company. The metaphor indicated that the prices of the company's stock were inflated and fragile, expanded based on nothing but air, and vulnerable to sudden bursts, as in fact occurred. We get a visual of something expanding, closed off from reality, yet ultimately doomed to pop. Everything you own has a fundamental value. That is, the value of that product based on a deep analysis of all aspects that go into it. In a perfectly rational world, the fundamental value would be equal to the market value. However, this is almost never the case. The market value can be either higher or lower than the fundamental value. There are many different reasons why bubbles happen, and they all deal with psychological factors. For example, the greater fool theory. This is when investors buy an asset not for its fundamental value, but because they plan to resell it at a higher price to the next investor. One of the first recorded bubbles happened in 1637. I'll let Gordon Gekko explain.
This is the greatest bubble story of all time. Back in the 1600s, the Dutch, they get speculation fever to the point that you could buy a beautiful house on a canal in Amsterdam for the price of one bulb. They called it Tulip mania.
In the Netherlands, tulips were a new thing, and this was an unequal society looking for rare status symbols. So at auctions, people would buy and sell future contracts for tulip bulbs. Hardly any money down was required. This created a positive feedback loop, where higher bidders were driving up the prices, which were creating even higher bidders, which were driving up the prices even further. And this continued until, like Gordon Gekko said, this single tulip bulb could be the price of a nice house on the canal in Amsterdam. At one point it got so bad that 12 acres of land were offered for a single bulb. But time passes and people forget, and we make the same errors in judgment. People borrow money from a bank to buy a house. In return, the bank gets a piece of paper called a mortgage, and every month that person has to pay back a portion of that loan plus interest. For a bank, this is considered a good investment because the interest rates are high, and in the early 2000s, it was a common belief that homeowners almost always paid back their mortgage loans. Investors love a deal like that, so banks take the mortgages and sell them to investors. Except they don't sell them one at a time. They bundle large groups of them together and sell the group to investors. They looked like safe investments. In addition, rating agencies were incorrectly rating these investments highly because it made their customers, the banks, happy.
This is your basic mortgage bond. Somewhere along the line, these B's and double B's went from a little risky to dog shit. Where's the trash?
Behind you.
I'm talking rock bottom FICO scores. No income verification. Dog shit. A lot of these triple B's are going to 0 too. A's, 0. B's, 0. Double B's, 0. Triple B's, 0. And then that happens.
What is that?
That's America's housing market.
But leading up to this moment where Mark Baum had that shocked look on his face, everything was gravy. In fact, much like Tulip Mania, a big positive feedback loop was at play. Housing prices were going up because of investors buying mortgage-backed securities, which made it look like they were higher value, which made investors buy more, which made the housing prices go up even more, and the loop continued until the point where mortgages were way more than their fundamental values. Just like Tulip Mania, just like the South Sea bubble, just like the .com bubble, and just like the housing bubble. If you listen close enough, you can hear a bubble pop. The question is, will we listen to the echoes of our history, or are we doomed to make the same mistakes over and over again?